Hey guys, welcome back. I hope you enjoyed the rest of your weekend, and hopefully by now you had a chance to watch the first half of the weekend update that I did upload earlier today. And if you haven't, pause right here, go back and watch it because it has a ton of information that you absolutely need to know for the week ahead. The link to that video is in the pinned comment. Go back and watch it, and when you come back, let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like, and don't forget to subscribe and turn on notifications so you don't miss out every time I post a new video. If you have any questions at all, please leave a comment. I do get back to them all within 24 hours. And don't be afraid of that thank you button. If you took an awesome trade based on something I said or something I taught you, leave me a tip using that thank you button. It's a really super easy way to show appreciation, and it helps keep me caffeinated while I continue to bring you new content. Alright, so starting in SPY, tomorrow's implied move is between 539 and 549, and that is from options. We have a $10 implied move to start the week, and the 30-day average volatility takes it $1 wider in each direction, 538 to 550, and Tuesday's implied move is between 537 and 551. And to the upside, the very first level to look for is going to be the 35 EMA. And right now we have futures up 0.45%. So if we open up anywhere near there, then we're going to be above the 35 EMA, and that's actually going to be a level to the downside. So 0.45 would take us to about 546.5, and then that 35 EMA would be to the downside. So if we do see it to the downside, that level we need to see if that acts as a support. When we are bearish, which means when the 35 EMA is underneath the 30-minute 200 moving average, this 35 EMA does tend to act as a resistance. And when we finally get back above it and see it as a support, that's when we start to look up. And then the next level above that is going to be this resistance right here. This was our Friday highs, and we also saw that level on Thursday. So on Friday, when we gapped up, we pushed up above the 35 EMA, and then that resistance on Thursday was where we saw resistance again, and then we got back underneath the 35 EMA. So those are definitely the first two levels, 35 EMA, then this resistance at just a little bit above 547. And if we get above that resistance right here, 549 is the top of the implied move, and 551 is the top of Tuesday's implied move. And above the implied move tomorrow, we have the island top, which is the up gap from Monday, down gap from Wednesday. And when we see an island top, it can definitely be a battle zone. There is usually increased volatility in these levels. We also do have the 1 hour 200 moving average directly above our trading range. And on top of the gap, here we have the 30-minute 200 moving average. So a lot of resistance just outside of our trading range tomorrow. If we do happen to get to the top of the implied move tomorrow, just be aware for the next day that we have that wall of resistance directly above us. So then to the downside, we do have the 50-day moving average. And last week on Wednesday, when we did gap down, we dropped down and we got underneath the 50-day moving average. It didn't offer much support initially, and then we dropped into the gap underneath it, which was the CPI, FOMC, PPI inflation gap in June. And we got into that gap, and then we started to come back up to consolidate around the 50-day moving average. So towards the end of the week, we were starting to see that level as a support, and we did close above the 50-day moving average. This is a huge moving average. This is on pretty much everybody's chart. So make sure you have it on yours as well. And then if we do break the 50-day moving average, then underneath us we do have that up gap from Friday. And let me lock that into place here. The up gap from Friday, and then within that gap we have the bottom of the implied move at 539. And then 537 is the bottom of Tuesday's implied move. So that was SPY. And switching it over to QQQ, the implied move over here is between 457 and 469, and that is from options. The 30-day average volatility is quite a bit wider for QQQ. It is between 453 and 473, and on Tuesday's contract that is between 454 and 471. And to the upside, we do have the 35 EMA directly above us. And again, NQ futures are up 0.73% in futures. So if we open up anywhere near that, 0.73% is going to take us about to the middle of the implied move here. So we could see that 35 EMA as a level to the downside, and it's an absolutely critical level to hold if we are going to swing up to the top of the implied move, which is at 469. We did see a little bit of resistance here and here, so I'm going to call that around 466. If we get above the 35 EMA and 466, then the top of the implied move is at 469. And then the top of the implied move on Tuesday's contract, which is the contract where we will see Amazon earnings in aftermarket. So of course the aftermath of Amazon earnings, it's Microsoft earnings that are on Tuesday. So Microsoft has earnings on Tuesday, and then Wednesday we'll see the move in the market for that in options. And I will have that move for Microsoft tomorrow night. And then so above that, above our implied moves for tomorrow, we do have the 50-day moving average is up there. This green line right here was a past support. You could see right here and right here, and then we did gap underneath that completely. So up here that is at 473.68, so 474 about. And then above that we also have the island top, which is this up gap right here with this down gap right here, and those tend to be a battle zone. We also have the 30-minute 200 moving average coming down here. So a lot to look for to the upside, but this is all outside of tomorrow's trading range. So if we have a big up day tomorrow and Tuesday, then just know that we're heading straight into resistance, and maybe be cautious up here and take those profits. And then to the downside, we do have this gap from Friday. Bottom of that gap is at 458. Bottom of the implied move is at 457. And then we have the 4-hour 200 moving average underneath the implied move for tomorrow and within the implied move on Tuesday. And then underneath that, we have the rest of this gap, which when we fell into that gap on Thursday, we closed out the bear gap, but the bull gap stayed open. So that is a support, and it could be a pretty strong support going into the next few days. That is the island bottom gap that we had, the down gap here and the up gap here, and this bear gap got closed out and just the bull gap remains. So be very cautious. If we get down to this level in the next 2 days, I would definitely, if you've been bearish, I would start taking profits. We can definitely still go lower, obviously, but always be mindful of zones of where you can take profit, so you don't miss out if we do use that as a bounce back up. Then switching over to SPX, the implied move over here is between 54.10 and 55.05, and that is from options. The 30-day average volatility is a little bit wider, 5400 to 55.05, and on Tuesday's contract that is about the same as the 30-day average volatility, so 5400 to 5220. And to the upside, the first level is that 35 EMA, and looking at ES futures right now are up 0.44%. So if we do open up anywhere near futures right now, then that'll take us about to the middle of the implied move. So that would be a level to the downside. That 35 EMA definitely needs to be on your chart, but it could be on the downside. And then if we get above that, then we have this resistance level right here. I'm going to say it was around 54.85, and you could see that Friday and Thursday. And then if we get above that, then the top of the implied move is at 55.05, and 55.20 is the top of Tuesday's implied move. And then above that, we just have a wall of resistance. We have the 1 hour 200 moving average. We have this island top gap, which is the up gap here and the down gap here. And then we have the 30-minute 200 moving average. So if we do see a really big up day tomorrow, it might not be a bad idea to lock in some profits because we are heading straight into a wall of resistance. So that is the upside, and then to the downside, we do have the 50-day moving average. Last week, as we gapped down, we did see enough of a momentum shift to drop really hard, and we did consolidate around the 50-day moving average. We did start to see that level as a support on Friday. That is not enough to tell if we will see that 50-day moving average as a support moving forward, but it is a promising move right there. And with Microsoft earnings coming up on Tuesday, we could see that as a place to bounce until we get those numbers come out. If we do break the 50-day moving average, we do have 54.10 as the bottom of the implied move and 5400 on Tuesday's bottom of the implied move. I didn't adjust this gap yet. This we did fill on Thursday about halfway. This gap that's underneath our trading range, and that is the CPI FOMC PPI gap from June, and so far we have seen that as a bit of a support level, and we have bounced from within that gap the 2 times we came into it. So that is SPX. And taking it over to IWM, we do have an implied move over here between 220 and 227, and that is from options. The 30-day average volatility is quite a bit wider here, 218 to 230. And on Tuesday's contract, that's 219 to 229. And then to the upside, the very first level to look for, it's not really to the upside, but I'm going to say right where we closed is where we have been seeing resistance. So right here, 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 and here. So that is around 224. We definitely did get above that on Friday. It was very weak. The indicators did go sideways. So 224, keep that on your radar. And if we get above this level, if we start getting into the middle of the implied move here, we do have that bear gap that we did see resistance almost to the penny here. This bear gap goes back to 2021, right before everything started pulling back and we saw that big down year. So that's right here. And I think even in the first half of the video today, I showed that on the 1-day time frame. You can't see it on the weekly candle because it did happen in the middle of the week, but we gapped down and then we saw resistance here. And then when we saw it last week, or maybe 2 weeks ago, 2 weeks ago right here, we saw that level right here and we pulled back. Looks like we are possibly going to see that level again, and just be aware that bear gaps that are long time bear gaps can definitely be a pretty strong resistance. So we do have the top of the implied move within that gap. It is 227, 229 on Tuesday's contract, and that is the top of the gap. And then underneath us we have the 35 EMA. This did close bullish last week on Friday. We do have price trading above the 35 EMA, above the 30-minute 200 moving average, and then green right here. So we did close bullish. We might carry that momentum forward and try and retest this bear gap right here. But if we do pull back and break that 35 EMA, we do have this up gap from Friday, which the bottom of that gap is just outside of the implied move. 220 is the bottom of the implied move. 219 on Tuesday's contract, and then that 30-minute 200 moving average is underneath all of it, ready to catch us if we do drop. And then lastly, we have DIA. And DIA is set up just a little bit different because we only have weekly options here. So this 398 to 413 is the implied move on Friday's contract. And then this range right here is the 30-day average volatility, which is the average size move that we've seen in the past 30 days. So this is the most likely range that we will see tomorrow. And to the upside, the first level to look for is going to be where we saw resistance on Friday. That is at 407.50. And if we do get above that level, then we don't have any other resistance within tomorrow's trading range. So if you need something to aim for, 411 is a good number. And above that, we are not very far away from all-time highs right here. That is at 413.86. And then to the downside, we do have the 35 EMA, and we did see the 35 EMA as a resistance for the earlier part of the week. Monday and Tuesday, we did see that as a resistance, and then we gapped down. And then on Friday, we did get back above that level. We are bullish here right now because we are trading price above the 35 EMA, above the 30-minute 200 moving average. So as of right now, we are starting the week bullish in DIA. And if you look down here, we do still have some upward momentum. So trade bullish until the chart says otherwise. If we do drop down to the 35 EMA, I would treat that as a place where we bounce up. And if we do break underneath that level, then I would not force a long trade until we could see support on that 35 EMA. So 30-minute 200 moving average underneath that, and then we do have that up gap from Friday within the weekly implied move and just outside of tomorrow's trading range. Bottom of that gap is at 399. And underneath all of it, we do have the 1 hour 200 moving average. That 1 hour 200 moving average is within the implied move towards the end of the week. So if earnings start coming in pretty bad and we do drop, just keep in mind that that is there, and it could offer us a technical bounce, especially if we close it out near the gap right here. So there you have it, guys. Everything you need to know in all of the indices to get you started off this week on the right foot. So have fun tomorrow, trade safe, make sure you take profits when you're up, and I'll see you guys tomorrow night.